Wait, what was that? Did I just hear that you want to know the differences between a market-based economy and a command-based economy? I'm so glad you asked, since it's important to know what type of economy we live in now, and an understanding of the differences between a market-based one and a command-based one will help us answer that. Maybe you're wondering what exactly an economy is. If that's the case, then I'm going to need to ask for your patience for a little bit while going over some economic basics with you. It's all important stuff though, you'll thank me later. So, let's get started. For starters, let's just say for one moment that things like bananas, butter, tea and coffee are goods. And people who need bananas, butter, tea or coffee are consumers. In a market economy, countries compete so that eventually the best bananas, butter, tea and coffee will be offered to the consumers at a fair price. If you think about it, once I explain everything, it makes perfect sense. Well, almost perfect sense. However, in a command economy like Cuba, this is not the case. When it comes to how economies are run, the two polar opposites are market economies and command economies. Who controls the production elements and how pricing are determined are two of the most important differences. In a free market, everything happens on the fly. When it comes to supply and demand, there's no such thing as a central authority. Examples of market economies include the United States, Japan, and England. When the government owns most or all of the enterprises, a command economy is created, where government officials control every aspect of production. Command economies can be found in the former Soviet Union, North Korea, and East Germany, to name just a few. Market and command economic ideas are, in fact, found in every economy. Market economies are based on private ownership of the means of production and voluntary exchanges, contracts between individuals and businesses. Prices and production schedules are established by the government in a command economy. Prices are determined by supply and demand in a free market. Most countries have a command economy or a market economy, but they always have some elements of both. In countries with a command economy, the economic system is intimately tied to the political structure. The economy is based on the free market. Economic actors in free markets can freely exchange goods or services, which is at the core of market economies. There is a strong connection between capitalism and market economies. There is no need for government permission to exchange or contract for resources owned by individuals and corporations. The term market refers to all of these random exchanges. This invisible hand theory was first put forth by Adam Smith, a British economist, in his 17th century classic Wealth of Nations. How much is produced depends on consumer demand and the availability of resources. It is the price signals in a market economy that help both producers and consumers make decisions. For the most part, governments have little impact on economic activity, other than taxes and regulations. In a free market economy, customers are expected to take care of their own interests and protect themselves from fraud and abuse because of the lack of government oversight. It is not the responsibility of the market economy to ensure that the less fortunate have access to needed commodities and services or opportunities. According to German economist Karl Marx, the concentration of wealth and power in the hands of capitalists makes a market economy fundamentally unfair and unequal. Capitalism became a household word thanks to Marx. English economist John Maynard Keynes argued that pure market economies could not properly respond to big recessions, and instead advocated for considerable government intervention to stabilize business cycles. The free market became the default economic model for many countries following the 1989 political revolutions. Command-based economy. When the government owns the factors of production, such as land, capital, and resources, and officials control the output of the economy, it is known as a command economy. A planned economy is another term for this. Among the most well-known examples of command economies is the Soviet Union, which was ruled by communism. All of the supply and demand in a command economy are controlled by the government since decision-making is centralized. There can't be a market economy without government intervention in setting pricing. In a command economy, macroeconomic and political considerations drive resource allocation, whereas in a market economy, the profits and losses of people and businesses decide resource allocation. to ensure everyone has access to the requirements and opportunities they need. Command economies place a high priority on social cohesion. Economics professor Ludwig von Mises of the Austrian School of Economics claimed that centrally planned economies were bound to failure because no realistic pricing could be established without private ownership of the production assets. If this happens, there will be a lot of shortages and surpluses. Individual freedom must be restricted in a command economy, according to Milton Friedman, an American economist. A command economy, he argued, would lead to economic stagnation because government officials would make decisions based on their own political gain. Additional factors to consider. In today's world, both market economies and government-run economies use a combination of the two approaches. As an example, although Cuba has long operated as a centrally planned economy, important market reforms have been implemented to help the country. A hallmark of a market economy is the decentralization of power that comes with privatization of many firms. To prepare for war, the free market economy of the United States shifted to a centrally planned one. Subsidies and social programs are also part of the U.S.'s command economy. A country's political environment may also be influenced by the type of economy it has. Economic freedom is strongly linked to political freedom, according to Milton Friedman. While there is a correlation between a strong welfare state and a democratic government, it is not a one-to-one correspondence. What are the benefits of a free market? Each consumer and producer in a market economy acts only in their own self-interest to establish prices. Profit motives and rivalry among firms encourage producers to give the most sought-after, cost-effective products at the greatest possible price. This is good. In what ways is a command economy better than an open one? With a command economy, a country can focus resources on areas where the free market cannot. To avoid food shortages during times of war or disaster, several market-oriented countries employ central planning mechanisms. The Defense Manufacturing Act, for example, was invoked by the United States during the COVID-19 emergency to order vaccination and testing supply production. What does it mean to have a mixed economy? The government regularly intervenes in the market to prevent shortages and address economic problems in a mixed economy, which incorporates the best of both worlds. Typical instances of mixed economies include China, Singapore, the United Kingdom, and many other European countries, which have a significant public sector and a welfare state in place. In actuality, practically every country has certain elements of a mixed economy. There will always be two camps, those that follow the rules and those that don't. Command economies are best suited to a structured society where all people follow the same set of laws. Market economies are best suited to a society of individuals, with individuals allowed to make their own choices. Crazy as it may seem, it seems that both systems have their problems with too much regulation, a command economy, and not enough regulation, a market economy. And, for those of us who are not economists, a command economy is like a one-way street with only one exit and no U-turns. Once you're in, you can't get out. It's fairly obvious that a command economy doesn't allow for much creativity or innovation to occur. A market economy, on the other hand, is like a four-lane highway with multiple exits and transfers. There's lots of available options to take, particularly if traffic becomes dense. Well, there you have it. The key differences between these two economies, all in a nutshell. I hope you have found this information insightful. Were you aware of the differences between a market economy and a command economy? Do you have any additional information that others should know about this topic? Let us know in the comments section below or join the conversation on Twitter. Be sure to like and subscribe for more content to transform into smart money.